The stock on our radar today. Post quarter one, the company had indicated that order book remains strong despite a challenging external environment, and they expect robust growth in FY24. 2 months into the second quarter, where does the company's guidance stand? What is the sequential recovery that we have seen? Vishal Thakkar, the deputy CFO at the company, is joining us now to discuss some demand trends and a lot more. Mr. Thakkar, good afternoon. Thank you so much for joining us. Always a pleasure speaking with you. In quarter one, a lot of chemical companies have spoken about this demand slowdown, inventory pullbacks that they've seen. But you said despite that, you maintain your strong guidance of 20 to 25% revenue growth for FY24. 2 months into quarter two, what has the recovery been like? You have a sizable exposure to export markets as well. Are you seeing some recovery in terms of volume growth, inventory destocking?
Good afternoon, and again, pleasure to talk to you again. Just to say that what we had guided earlier also, the first 2 quarters will be flattish, as we were saying, and then we believe that the second 2 quarters of the second half is where you will see the growth coming back. And whatever till date, whatever we have seen from our interactions with our customers, we believe that should continue. That's our feedback that we have got from the customer and from the demand side as well. So I think the second half looks more robust. First half will be flattish, as we had mentioned earlier as well.
Okay, just putting numbers to that, 20 to 25% top line growth, and when you say you'll maintain margins, which is what your earlier guidance was, it will be around 27%, right?
Yeah, so if you look at historically, we've been guiding at 26 to 28% EBITDA margin, which we should be able to continue. And on the growth, I think it will be around 20 percentage point around. But let's see. Let's wait for one more month to go, and probably we'll have a better view on the numbers as we go. But today, I think we would continue to look at the similar numbers for now.
While you have clarified on this recent, speculation about the company acquiring Austria's ESIM Chemicals, so while you're not pursuing ESIM Chemicals, are there other M&A candidates on the table which you're looking at?
See, as a corporate, we would always be looking at multiple opportunities at various point in time. But as we said in our press note as well, and what I have said, that if and when we have anything, we'll definitely come and let all the stakeholders know. So today, I don't think there is anything significant for us to really comment or even inform anyone. Today we have nothing major to comment right now on this. But okay. Yeah.
Okay, so we will take you up on that as well, if and when there are any updates in that. But, you've been on an expansion spree. You raise funds in order to fund some of your capacities as well. Fluorination is one place where Street is quite bullish, because that's a place where margins could also be higher. What is it as a percentage of revenues right now? What kind of capex are you putting in here? And once it starts contributing more to your revenues, how will your margin profile change, and by when?
Yeah, so if you look at my margins, the first thing is the fluorination side. Today it is contributing around 12 to 14% of my revenue, even today. And as we grow this, we are doing a capex of around 420 odd crores out of the 670, which will go into the fluorination side of the projects. So around that kind of a capex is going to go. And as we grow, the fluorination will continue to become a more and more meaningful part of our business. In terms of numbers, I think we will be into 20s soon, but let us see when the plants come on stream is when we'll be able to get to that thing. But if you look at it from the LOIs and contracts that we have signed, then you will realize that large part of our new demand is coming from fluorination as well.
Okay, so 12 to 14% of revenues right now could head up to 20% in terms of revenues. For understanding, since around major part of your 420 crore capex will also be there on fluorination, around 160 to 170 crores is what you said. What is the asset turn? Is it different for fluorination chemistry versus the other chemistry or chemicals that you are in?
Okay, first, I have not said 20. I am saying that it will be in 20s. Okay,
so in 20s. Okay.
Okay. Okay, and second is the asset turn will be as we had guided earlier. Also, it will be over 1.75%, 1.75 times of the asset investments. The asset turn will be in that range. So I don't think that will be anything different than what we expect. And two is, if you come from the margin point, yeah, typically you will tend to get a little bit of higher margin, but I would refrain from guiding it anything more than what we have said for now. because you will have to see that it will be blended margins, and as we go further up, various parameters will come into play. But let's be comfortable at 26 to 28 for sure. This is what I would.
You didn't give a timeline to when the contribution of fluorination can reach up to 20s from the current 12 to 14%.
Okay, so see, you have to look at it that my plants are going to come on stream in a year's time, and then the ramp up will start. And as you can appreciate, all these are about where the ramp up also continues to come up. And also you have to also appreciate that my other portfolio is growing. It's not that I have a stagnant portfolio, and so it's a combination of that. That's the reason I'm saying in a 2 to 4 year time frame you should be able to see these numbers.
Oh, yes. No, we are also asking about fluorination because a lot of analysts are very bullish on this space and the expansion that you're making in this particular segment as well. I just want to understand, because the last time I had a conversation, the idea was there is a Europe Plus One theme which is playing out for all the chemical companies. Is it still an ongoing theme? And in terms of contracts, is it possible for you to go ahead and increase prices because of global volatility or cut down prices? How do the contracts work here? Because the last time you told us that 60 to 70% of contracted revenues are now on 6 monthly basis. How does that change things currently, considering the situation that we are in?
Okay, so first thing, as I can say, is that the Europe Plus One theme, if you really look at it, is primarily, I think that would continue now, and I'm talking more as industry as a whole, and then probably we can talk Anupam as specific. But as a whole, I think China Plus One, Europe Plus One is looking like it is here to stay. And I'm not saying that Europe will not be having its part of the game. They would, but there is a strong preference, and I think that momentum is with the Indian manufacturers, and that should continue because people have realized that Europe is not stable as they believe, and hence this would come into play. So that's the point here. Now let's come to the second part of the question, which I just missed it, but if you can just say again, I can answer that as well.
Yeah, I just wanted to understand how's pricing working right now in contracts, because around 60 to 70% of contracted revenues were on 6 monthly basis. Is that a practice which is continuing?
Yeah. So see, pricing, I will tell you very simple thing is that for us, any up or down in the pricing will result into our prices being realized. So if you look at it, and I'll give you a very empirical evidence, when there was an inflationary environment, if you look at it, my margins were stable. Right? Even before the inflationary environment existed, we were flat, we were stable. When the inflationary environment came in, I was stable. Today, when there is a deflationary environment, I am stable on my margins. So I think margins, it's a very clear, and that's where if you see the whole concept of a bit of an inventory keeping and also having a contracts in a particular manner really helps us pass through fully.
Okay.
Just very quickly, you had a target to bring down your working capital days to 200. It's currently higher at 250 days. What's the roadmap? We stand by it. We would want to do it in next 12 months time. So the trajectory is there. If you look at it from 290, it has gone to 250, and the trajectory continues. And time frame also hopefully should be in the time frame that we have said. So I don't think that we are changing our view as of now, and I don't think the focus of management is pretty much strong on looking at and strengthening the balance sheet parameters, and we'll continue to do that as we go.
Okay. All right. Thank you so much, Mr. Thakkar, for joining us and detailing a lot of aspects of the business, demand, pricing, inventory, balance sheet, and a lot more. So that's the word coming in from Anupam Rasayan. We'll slip into a short break. Up next, we'll have